Hello, everybody, and welcome to the Local Business Growth Lunchtime Webinar Series 2022. Adam Butte here from the Authentic Sales Training Academy, and excited to be co-hosting this 6-week live and interactive series with you all on not only how to survive the potential rough waters that may be coming ahead, but to thrive beyond it. We put together an expert panel of industry leaders and business advisory people from the business and finance, banking sectors, sales and marketing worlds, where each week we'll be hosting a quick 20-minute session covering key topics of interest on how to restructure for future business expansion, growth and success. We have Matt White from MJW Advisory, Phil Imhoff from Bank of Queensland Robina branch, who have presented the last 2 weeks. Today we've got Glenn Bossy from 2020 Financial Services. Next week will be Mark Grant from Costless Payment Solutions, followed by a special guest, which we will announce soon, and Nick Cree from SmashGo, and then myself from the Authentic Sales Training Academy. At the end of each session, we'll be opening the lines for anyone that's joining us for Q&A. So make sure you really figure out which speaker you're coming to listen to so you can get your questions directly answered live. But as I mentioned, today we will be hearing from Glenn. Glenn is the owner and principal of 2020 Financial Services, which is a financial planning business based here in Queensland. Glenn's got over 27 years experience in financial planning, which is a few life sentences there, Glenn. And he really enjoys the opportunity to work with people to achieve your financial lifestyle goals, partnering with you to build, protect, and manage your wealth and provide you with a clearer vision for your financial future. Glenn specializes in cash flow and wealth creation strategies, personal and business protection, retirement, aged care, and estate planning strategies. There's a quick disclaimer, which I'm not going to read, but we are going to put that in the chat so that you know that this is general advice only, and we hope you can get some real value out of today's session. So, Glenn, let's take it away.
Okay, thanks, Adam. Appreciate everyone's time here today. I suppose I'd like to start with, in my experience, is that why do we do things in life? What's our purpose? What's our vision? What's our goals? So often, if we can't get our goals and our objectives and our whys organized, it just makes it very difficult to make decisions in life. Over the years, I've seen so many people in their 80s and 90s, for example, and they might have millions and millions of dollars, but their personal lives are not happy. They're not happy in their own personal lives, yet they've achieved so much money. Or the other side of things, it's amazing how many couples I get with, and they go through a stage of events. They might be going into retirement, but both of them got different visions. Both got different goals and why, what's important to them in their life. So often, sadly, that leads to separation because they're on two different separate pages. Another, example is people are doing jobs that they don't like to do, but they're doing it because that someone else wants them to do that job. So they're living their life through what they think someone else wants them to do, instead of doing their own purpose. And then at the same time, we do often do things day in, day out, and we never review what we do. So, if we keep doing the same thing and hoping for different results, unless we spend that time and to review what we're doing, we get the same result. So in my experience as a financial planner, the most important is to work out why are we here? What do we want to achieve out of life? What's our underlying things that make us happy? What's our vision? What's our purpose? So I would, it's easy, and I'm guilty of it too. We can work around the clock, or we could do this. A year goes by, another year goes by, but it's crucial to find out why. What's your why? What's your underlying reason? What makes you happy? So I just encourage everyone, and that's probably the biggest thing on the financial planning, is trying to find out what's the purpose. Like I said before, people have got a lot of money and that doesn't generate happiness. I've seen people with very little money, yet they're very happy. So just take that time, because that's the most crucial thing is, and really as a couple and individual, just work out what makes you happy and what's your purpose and vision. So that's what we mostly concentrate on, trying to work out people's goals and objectives. Now, generate wealth. How do we generate wealth? One piece of advice, and it to me is having a good accountant. We've seen Matt in the first session, but working along with the accountant, because do we buy assets in individual names? Do we buy assets in joint names? Do we buy them in companies? Do we have our business in a company? Do we have assets in a trust, or do we set up a self-managed super fund? Having the right ownership of your assets and your business can make so much difference going forward. So it's crucial that you seek advice from an accountant and a lawyer and a financial planner, and make sure you got the right business structure, because that's going to make you a lot of money or lose you a lot of money, depending on, getting the right structure. Other ways of trying to generate wealth. One is we had Phil from Bank of Queensland last week, but working with your bank or your mortgage broker and reviewing your debt. Like most people have debt, and a lot of them have debt against your own house. So you can save thousands and thousands and thousands of dollars after tax dollars by just reviewing your debt and making sure you got the best debt possible. So I highly encourage people to review your debt and your loan structures with your bank or your mortgage broker. We have the privilege of working with Mark next week. Talk to so many business people, and the margins are getting tighter and tighter these days in your profit margins. But not many small business people review their FPOS costs. So looking forward to Mark next week, because that's becoming a major cost of people. So how do we generate wealth? There's just two examples of trying to reduce your costs. Now, if we know why we want, what our goals are and what our objectives are and what's our purpose and why we're doing things, if we've got a clear understanding that, when we had COVID or GFC, most people don't know what they're trying to achieve in the long term, so they'd sell. And you sell your assets when everyone else is selling, and you're just costing yourself a lot of money. I just looked at ASX 200. So it's just an index over the top 200 shares. It doesn't take income into account, just takes in capital. If you bought on the 6th of March 2009, the index was 3,145. On the 16th of April 2010, which was only about a year afterwards, the index, this ASX 200 index, was 4,985. So if you bought on the downturn when majority of people are selling, you would have made over 60% capital gains in a space of about 13 months. So if you've got your goals and you've got your long-term vision, you don't have to panic sell when everyone else is selling. Another example is COVID. 20th of March 2020, ASX index was 4,816. On the 14th of April, 2 years later, it was 7,523. So if you bought in March 2020 and you looked at, 2 years later, you would have been up by about 60% again. So keep going back to your long-term goals, your whys, your vision. If you've got that sorted, you can take advantage of the markets. No one knows the time of the markets, but it's incredible when, we've got this herd type of thing. When people are selling, that's when majority of people sell. So you go against it and you're buying, it can make a lot of difference to your overall wealth. And that's where in downturns and recessions and, the media, makes things you know, with the whole COVID thing, I think we've all had enough of that over, you know, the last 2 years, but the media always makes things sound worse than what they are. And then we panic, and that's when we do actions that sort of come back and don't, you know, bite us. How else do we generate wealth? It's just budgets and cash flow. Yeah, I mean, no one really likes to sit down and do budgets and cash flow, but you know, working through your budget and just reviewing all your expenses, like, you know, your telephones, your internet, just car insurance. Talked about FPOS costs, your home loans. So it's crucial to, you know, spend time and go through your cash flow and go through your budgets and review and see how you can save money and how you can generate more money from the assets you've got. This is just really general, you know, I mean, super, you know, I mean, especially anyone in business or any personal person over age 60, you know, I mean, we can put money into super, claim it as a tax deduction, and you can get money out of super after 60 tax-free. It's incredible amount of people after, you know, paying 45, 40 cents on the dollar tax, and they're over 60 and they're not putting money into super, where they can put money into super within the legal requirements, make it, you know, claim a tax deduction and get money out of super tax-free. So that's another way of generating wealth. There's many different ways, you know, I mean, I have no preference to property or shares or, you know, I mean, there's so many different ways of making money. Just with this brief time, I just wanted to touch on a couple of points. Insurance. Now, that can, you know, I mean, if you haven't got the right insurance, that could really pull you apart. We have car, contents, house, health, and income. Now, as a country, virtually everyone has car insurance. But what's more important is your income, your future income, or your car. What's when it comes to the crunch, what's more important? So we run out and get car insurance, but not many of us have income protection. And if something happened to any of us and we couldn't work for 2 or 3 years, what would we do? If we got sick and we could not work and our business did not generate any income for 2 or 3 years, how would we survive? Car insurance won't help us, but income protection insurance can help us. And in today's world, it's been an incredible amount of people that initially, you know, we all get insurance, but never think we're going to need it. But if we didn't have insurance, where would we be? So really look at your insurance and you know, I mean, if you can't afford all types of insurance, there's ways your super funds can pay for it. There's different methods, but I highly, anyone that's working, you know, I mean, highly recommend you sit down and talk to your financial planner about income protection. And there's many different types of insurance, but I just want to focus on that. Now, when it comes to insurance, it's so difficult. That's why you need to seek financial advice, because there's so much different. Like with income protection, are you covered for your own job or are you covered by any job? What's your waiting period? Do you have 30 days waiting period, 1 year waiting period, 5-year waiting period? What's your benefit period? You know, that can all change from, you know, 1 year, 2 years, 5 years, 65. So not only is it important to have the right insurance, it's also very important to make sure you've got the right policy definitions. Unfortunately, in Australia in the last couple of years, we've seen so many people with house and contents insurance thought they were covered by flood damage, but they weren't. So they lost their house because they didn't have the right insurance policy. Same with income protection. If you don't have the right policy, you know, you could miss out. So that's why it's crucial to spend time and get the right policy to suit you, suit what your financial requirements are. Another thing is I see so many business people, it might be two people, two different families go into a business. They set up a business, but they don't have a buy and sell agreement. They don't have business insurance. One partner dies. You haven't got the money to buy out the other partner. The other partner's wife comes into the business. Maybe the relationship's not that brilliant with your partner's wife, and the business falls over because you haven't got an insurance policy in place or something in place to take over in case something happens to one of the partners of the business. So that's really quick. Again, just a very quick overview of insurance, but I think it's very crucial in everyone's lives. Now, there's two things that are going to happen to us. One, we're going to pay tax, and the other thing is we're going to die. So sadly, the day is going to come for all of us, but how many of us are organised for it? Like, you got your loved ones, you got your partners, you got your children. If something happened to us today, is our assets, assets we build up for our loved ones, are they going to go to the right person at the right time in an effective manner? It's incredible. If I just pick out one thing, super. Most people rely on their super, especially, the tax deductions of getting money into super, employee super contributions. But not many people I know who their super is going to go to. Haven't completed a binary nomination. So you got super there, but the nomination's not completed or not invalid. So what happens to your super in them circumstances? A lot of people don't realise, if you haven't got your super set up right, the government could get up to 30% of your super balance when you pass away. So there's many strategies to reduce that, but not many people realise. So, something happens, you got $1 million in your super fund and you haven't set it up correctly, or you haven't, worked through the thing, the government could walk away with, 300,000 of that money. So your hard-earned super, nearly a third of it going to the government instead of the people you intended to go to. So it's just crucial to make sure that you spend time again with your lawyer, your accountant, your financial planner, to make sure your hard-earned assets go to the right people at the right time in an effective manner, so your loved ones are looked after. There's a lot of people that've got children, and it's easy for all of us to say, okay, nothing's going to happen to us, but what's going to happen to our children if we pass away? Have we worked that out? Have we talked to potential guardians to look after our children? Most precious things in our lives, but have we thought about them if something happens to us? So that's a really quick overview, but I can't emphasize enough the first point, getting your whys, get your why sorted, and your goals and your objectives and your purpose and your vision of your life, because the day that we pass away, we can't change that. So we can live our days the way we want to live our days, will just make so much difference in our long-term lives. I appreciate everyone's time. Now we're going to share, I've got a little, I think we're going to share a little fact finder of mine online. So it's 2020 financial services. Thanks, Nick. Nick's just put it on the chat box. If anyone wants to, I have a really basic, just introduction fact finder, just goes through some really basic things about yourself. If anyone wants to fill that out, I'm happy to review your fact finder, obligation-free review. And especially with, your existing insurance policies, your super policies, I'm happy to have a look at that. If there's something wrong, I'm happy to advise. But I mean, just for the peace of mind, I'm happy to review your super insurance, or if you complete your basic fact finder, I'm happy to go over that and see if I can help you out. Okay, thank you for your time today. Hopefully everyone's got something out of it, but in 20 minutes, it's normally a 2 or 3 hour initial meeting.
Thanks so much.
That's excellent, Glenn. Can I ask what's the most common problem that you see when people come to you? Like, is there a common theme where you're focusing really heavily on continually fixing one portion of what you've just shared today, or
it's hard, like retirement, like 60, people don't think about putting money into super and get money out of super to reduce their tax, so they're using their tax to generate future wealth for themselves. Sadly, I mean, I have experiences of people that have insurance, and sadly, a lot of people go through trauma events without insurance. And when I mean, it's in today's age, and doing this for over 20 years, there seems like there's more illness now than ever been. And if you don't have the insurance in place, it can quickly destroy your financial, your lives. And you're dealing with health issues the best of the time. That's hard enough. So if you're worried about money, that can be a major issue. Amount of people that don't realise that, I mean, the government can get so much of your super. It's incredible, and it's sad in one way, but I've had to visit people in their last few days of their lives and get money out of their super. So, because a third of the money would go to their children, not to the government. In financial planning, there's things that pop up every day. I don't like money, unfortunately, but money sort of makes or breaks so many our goals, what we want to achieve in life. So it's there's so many different areas to cover.
I've heard you speak many times, and I've known you for so long. A couple of questions for you. Firstly, you mentioned about self-managed super funds. What sort of amounts should someone be looking at if they are considering a self-managed super fund?
Thanks for that question, Mark, and I appreciate your friendship over so many years. It's self-managed super fund. It's very hard for me to give advice here. It really depends on your circumstances and what you're looking to invest in. So, I mean, you've got the retail super funds that give you exposure to certain things, and then the self-managed super funds opens up your exposure. If you want to buy property, I mean, you can't buy, to my knowledge, you can't buy direct residential property through a normal super fund. So if you really want to own a property, that's one option, the self-managed super fund. But I can't, without knowing your circumstances, it's a very hard question to know how much you need, and depends what the purpose is for.
Yeah, could I just one other question, or not so much a question, but a comment, and it's just to reinforce what you said about insurances. In a previous life, and I won't talk much about that previous business life I had, but there was a client I was dealing with here on the Gold Coast that was a plumber, and his business was turning over $12 million a year. And for those on the call, this is just reinforces what Glenn's talking about, the importance of insurances, is that I was helping this particular plumber, and I was mentioning to him the importance of the insurances. Why it's important is quite simply, no disrespect to the ladies on the call or the ladies listening. However, his wife had the latest BMW. She would dress in the best clothes. She would have lunch at the best restaurants. So I was always reinforcing to him the need for him to ensure that if anything happened to him, his wife could enjoy that same lifestyle. His children were going, his 3 boys were all going to TSS. So if you know TSS, that's big dollars. Cut a long story short, I get a phone call from him, and he's on the operating table at the Mater Hospital. He just lost his left arm in a car accident and was about to undergo major surgery. So the moral of the story here was we could not help him with his insurances at that time. He has now lost everything. He's lost his marriage, he's lost his wife, he's lost his family and his business. So there is the importance of seeing someone like Glenn now rather than later, because all that could have been avoided if he had taken up the option of having advice much earlier.
And some of the self-managed super funds, if you go down that way, you can obviously have your life insurance portion and TPD portion through there, but the income protection part would still need to be paid outside of super, correct?
No, income protection can be paid inside super as well. Generally speaking, because the income protection is a tax deduction, generally speaking, it's better in most cases to have in your individual name. But if you haven't got the cash flow, it's better to have, have it through your super is a good option as well. And when you compare income protection to car insurance, and just generally speaking, but a lot of the cases are very similar in cost. And I'm not saying people not to have car insurance, but what's more important, income or car insurance?
Glenn, can I just ask about the superannuation thing you're talking about? I've got a binding death agreement nomination, but what you're saying is even with that, let's say that's 100% going to my husband at the moment if anything happened to me. Are you saying that, oh, well, it probably wouldn't apply because he's over 60, that it'd be tax-free? Or if it was to our children, is that where the tax thing comes in? And is that the deposit and withdrawal thing that becomes when you take out and put back in? Is that the sort of strategy you're talking about?
Now with super, it depends on the components of super. It's hard to go through all the details here, but it depends on what type of components are within your super fund. And if it goes, what age, do you mind me asking what age your children are?
They're 36 and 30. Yeah.
Okay. So because they're if they're not dependents of yours at the moment, and your super went to your children, up to 30% of your super balance could go to the government. If it goes to your husband, because your spouse, that's totally okay. Unfortunately, a lot of people, they lose one partner and they still got super, and then they put it to their children. There's so many strategies, but what a lot of people do, especially now the law's changed up to 74, you can pull your money out of super and put it back into super.
Yeah, that's what I thought.
And you change the components of your super fund so you don't have that tax liability, but you need to do it before you're 74, because after 74 you can't do it. The other thing I was talking about is you can put in up to 27,500 per year into your super and claim as a tax deduction. And you can go back to the financial year commencing 2019. So if you haven't made the full contributions in the previous years, you can go back and make up for the previous years in this financial year. So a lot of people can, you're paying tax, but they don't realize they can put money into super and claim as a tax deduction. And when you're 60, you can still be working and you still can access money out of your super tax-free. So if you haven't got the cash flow, you can use some of your super money to, help you out from a cash flow point of view.
Yep. Awesome. That's good. Thanks, Glenn.
Just hard in 20 minutes. There's so many things you can try to cover off in 20 minutes.
Last question for me for today. You talk about the importance once again of insurance. How often should that be reviewed?
Quick question: if you have children, or you get married, or you get divorced, or your income changes, it should be reviewed as soon as any major financial thing happens in your life. but at least every year or 2 years should be a review of your insurance, because especially in our space at the moment, so many insurance companies have come and gone and been bought out by other insurance companies. It's crucial to make sure you got the right definitions, that you got the right policy for your needs. So if your circumstances change in any way, you should review it. But then you should review at least probably yearly as well. Anyone else?
I've got a quick question. Yeah, sorry, we got some handyman working and he's taken out my internet. A question I've got, when you were reviewing your insurances, there's so many of these different websites that offer these services. Clearly, these websites are only in it to make a commission on whoever they're sending people to at the end of the day. And it's such a time consuming exercise to figure out where to go, what to do, and what to look for when it comes to all the insurances. Where do you recommend people start? Because you can save so much money on getting the right insurance, but it's making sure you're going to the right places on getting that done.
Yeah, I struggle these days to keep up with all the different, every insurance company has like 3 or 4 different IP policies. So I struggle myself to keep up with all the policy definitions for each insurance company. So I heavily rely on, I pay quite a bit of money for research, and I spend hours and hours every day going through different, talking to national managers, talking to different people in insurance companies, reading documents. So I just think it's crucial that you build up a relationship with a financial planner, and it's just so hard by yourself, and it's just crucial to build up that relationship. So I just think you need to see a financial planner that has got experience in personal insurances.
And I agree with that, Glenn. I know that my experience with some financial planners tend to put me into areas where their commissions can be greater as well. And I'm not taking anything away from you. It's just my experience in that, because ultimately it's a product to sell, right? So
yeah,
how do consumers know that when they're going to the right financial advisor that they've actually got the right interests at heart?
How do I answer that?
Just putting it on the spot, mate.
Yeah. I suppose, no one's going to get it right all the time. I suppose it just is that gut feeling that, I suppose you just spending time with your financial planner, and just, it's just, I suppose you're feeling, you don't, how do you know you got the right product? How do you know you got the right financial planner? I don't know. I suppose from my point of view, I'm always trying to work with people that I know I can work with. I don't know what the share market's going to do tomorrow or next week or the week after or next couple of years. So I'm going to make wrong decisions. But it's just trying to get working with somebody that you feel comfortable with. Have they got the right answers? I don't know. It's hard to, the hardest thing is insurance products change on a weekly basis. So I could put Adam into something today, and in a year's time, it could be a totally better product on the market. So I haven't, because circumstances have changed.
Yeah,
that's why I don't sleep at night time. I'm constantly running through my mind.
So great info today, Glenn. In one note, what separates you from all the other financial advisors?
Okay. I've been doing this for 27 years. So I've been around a bit and I've seen so many ups and downs and that type of stuff. I think I put a lot on my country background. I grew up on a farm, grew up in the country. It's hard. On the farm as a child, it was hard work. You really had to long hours, and I suppose you had that respect. So for me, mine is my experience and one of my upbringing in the country. I just think that helps me to relate to a lot of people.
Awesome.
And then I suppose another thing is you've got to sort out your license. Every financial planner's got to have a license. I have mine through a company called Financial Force. So you've got to make sure your license works in with you. I think that's crucial too, because a lot of people are limited to what they can do depending on their license.
That's awesome. Well, great preso, Glenn. How can people get in touch with you on top of the little fact check that you've sent, if anyone wants to have a conversation?
Through my my website, it's got contact details there through 2020financialservices.com.au. You can also, there's a newsletter there, comes out every week. If you want, add your name to the newsletter and just start off getting the newsletter. So there's one is just contacting me through my website, phone or email, adding to yourself to the newsletter, or doing the online fact finder.
That's awesome. Well, I appreciate your contribution and your service today. And if anyone wants to take Glenn up on his offer, I highly would recommend connecting with my interaction with Glenn. Very honest, very reliable, and quite a genuine fella. So the sort of guy that I'd have no problems referring to. So appreciate that today, Glenn. Next week, we've got Mr. Mark Grant from Costless Payment Solutions, and Mark will be discussing 3 topics. One is how the recession can impact your finances, therefore cost reduction in business is paramount. The impacts of a possible recession on business. What they do is they lead to cash flow, decreased demand, and subsequently changes of the way that business is done. So Mark will be sharing some tips on that. And finally, we'll be covering the recurring payment solution that will assist in helping feed your cash flow. So cash flow is king when it comes to business, Mark. So I'm looking forward to your A game next week, and no doubt you'll knock that out of the park. But much gratitude for all of you that have shared today with us, your time. We appreciate that. We know that's the only commodity in life you never get back. So thanks for hanging out with us today. And Glenn, is there any final messages that you would like to send out before we wrap it up?
Just enjoy your lives. That's probably the biggest thing we learned from COVID is do the things we want to do, enjoy it, because that's that's the most important asset we got, our happiness.
Agreed. All right, awesome. Well, great stuff today, mate. Thank you very much.
Okay,
thanks for all of our visitors, and same time, same channel next Thursday. Look forward to seeing you all again with Mr. Mark Grant.
Thank you.
See you guys.
Yeah.
See you, Janice.